So you want to invest your money in stocks. You've got it sitting in the bank right now and it's not really doing anything for you, and you don't have enough money to invest in real estate or whatnot, but you keep hearing about the stock market and stock market investing, especially with all this GameStop crap that's just happened recently. But anyway, if you've been thinking of investing in the stock market, or you are invested in the stock market but you've only just recently started, then this is the right video for you. Whether you've got $100, $1,000, $10,000 or even $100,000 and you're wanting to start investing in the stock market, then you've come to the right video. This video is going to help you out in a major way and you're going to get a ton of value out of this video. Today we're going to cover what is the stock market, what is a stock, how do you buy and sell stocks, and how do you make money from stock market investing, and why do you want to invest in the stock market, and two different methods of stock market investing. And we're also going to look at what is the risk when you do invest in the stock market. So we're just going to completely cover it all today. This video is going to be a complete beginner's guide. It's going to help you guys out a lot. It's going to be a video jam-packed with knowledge for you guys today. And if you're new here or you just watch my videos and you aren't subscribed, I can see there's quite a few people that do that, please consider hitting the subscribe button if you keep coming back to these videos especially. That way if you subscribe, they'll come up in your feed so you don't have to keep coming and having a look at my channel or whatnot. Also, don't forget to smash that like button. Obviously helps me out greatly as well. I do appreciate it. But let's get into it. So what is the stock market? Think of it like a big warehouse where you can go and meet people that want to buy and sell stocks to each other, except this warehouse is accessible from anywhere in the world with an internet connection through your phone or a tablet or a computer. Now hold on, what is a stock then? A stock or a share of a company is a very small piece or a very small part ownership of a specific company. If you buy a stock of a company, so if you bought one stock of Facebook, then you technically own a very small percentage of the company. For example, let's say I had a company that makes this phone. Now everyone loves these phones. I'm making a ton of money making these phones by myself, right? But then all of a sudden out of nowhere I get 9 random people come over interested in the idea and they want to put some money towards it as well. They want to help the idea grow. They want to help the business grow and for the business to get out there and make even more money. Let's say they are willing to pay me 10 grand each for a part ownership in the company. So what I do is I break this company into 10 different parts or shares. I own one share of the company and I each give these other 9 random people another share in the company. In exchange for the one share that I give them, they give me 10 grand. I own one share, everyone else owns one share, therefore I own about 10% of the company. Everyone else owns 10%, and now I've just got 90 grand which I can put towards the business to help that business expand and grow even further. Now this is essentially what companies do when they publicly list their company on the stock market, but on a much larger scale. Instead of breaking the company up into 10 different pieces, they would break it up into millions or sometimes even billions of pieces. Because some of these companies are worth hundreds of billions of dollars. Like, let's look at Facebook right now. Right now it has nearly 2.9 billion shares on the stock market. So if I buy one share in Facebook, then I essentially own 2.9 billionth of the company. A very minuscule percentage, but I do still own part of that company nonetheless. I'm hoping that's making a bit more sense to you guys now. I think it's a good way to explain it. But now that we understand that, how do you buy and sell stocks? Pretty much to buy any share in any public company, you need to open up an online brokerage account. Basically, using these brokerage platforms, it will allow you to buy and sell shares on the stock market. Now, there are a ton of different brokerage platforms out there. Each all have their pros and cons. Ultimately, you need to do your own research on these ones and see which one is going to suit you best. But most of these have an app that you can get on your phone, so you can even buy and sell stocks from your own phone. It's very easy. The brokerage platform that I use to purchase shares in USA companies is called Stake. If you're an Australian like me, I believe that this is by far and away the easiest app to get access to the USA stock market and buy and sell shares in USA companies. If you do have a look at Stake and you think that might suit you, use my referral link in the description, because when you sign up you actually get a free share in either Dropbox, Nike or GoPro, and I get one as well, so it helps you out, helps me out. But essentially, no matter what app you choose, most of them will allow you to buy and sell stocks for free nowadays. You may have to pay a small fee with some of these each time you wire money into and out of your account, but there isn't really any kind of commission fees for buying and selling stocks nowadays. I know there used to be back in the past, but that is since gone. But like I said, it all depends from broker to broker. I think most of them nowadays you can't go wrong with. Does make it real easy to start investing, especially if you don't have a ton of money. Okay, so how do you make money from stocks? Now, there are quite a few ways to make money in the stock market, but since this is more of a beginner video, we'll just talk about the main two. First is stock price appreciation. You may have heard the term buy low, sell high before. Ideally, if you buy into a good company at a good price and you hold that over the next 5 to 10 years and that company continues to perform well and continues to have success, then ultimately that company will become more valuable over time. And if the overall company becomes more valuable over time, then obviously your share or your part ownership in the company will rise over time as well. Someone is going to want to pay more money for a company that is making $100 million than a company that's obviously only making $10 million. Simple as that. Let's just say you buy company X for $10 a share and you hold that for over 5 years or so. They continue to actually do really well over that 5 years. And then after that 5 years or so, someone is now willing to pay $50 for that one share. Then if you sell them off, you obviously profit the difference of when you bought in at it and when you sell them for. Now, the other way that you can make money from the stock market is from dividends. Now, a dividend is essentially money that is credited into your brokerage account from the company every, say, potential quarter or half year. And essentially, companies will just pay you a dividend or pay you this little bit of money every now and then just for essentially holding the stock. Keep in mind though, not every company pays a dividend because a dividend isn't compulsory. Now, those are the two main ways that you can make money in the stock market. Like I said, there are some other ways that you can make some money, but since this is a beginner video, just thought I'd talk about the main two there. Why do you want to invest in the stock market though? Well, for one, it's probably the easiest form of investment to get into. The barrier for entry is so low when compared to other investments. Real estate's a classic example. You need a lot more money, you need a lot more capital to get started in real estate investing than what you do the stock market. The stock market, you only need a few hundreds of dollars. You can start investing in the stock market with just a few hundreds of dollars and an internet connection. And another reason would be you obviously want to make some money, right? You want your money to work for you and you don't want you to work for your money. Because once you start to build this thing up, once you've been investing for a few years or so, the compounding effects become crazy. Now, what kind of stock market investing is right for you? Now that we're through all of that of what I've just discussed, hopefully you've got a bit further of an understanding now about what the stock market is and what you can do. But there's actually two main types of investment methods. One is individual stock picking and the second would be passive investing. Now, we'll talk about individual stock picking first. Individual stock picking is obviously what the name suggests. You put your money into individual stocks. You invest your money into individual companies after doing extensive research and finding out that this company is going to be a good investment. Now, if you're good at individual stock picking, you can easily beat the average return, or average yearly return of the stock market. And you can really see some awesome returns. But obviously, that does not happen overnight. You need to devote a lot of time and research, reading annual reports of companies, reading quarterly reports, studying PE ratios, price to sales ratios, everything like that. Now, if you're brand new to stock market investing, all of those terms might not make a lot of sense to you, but I do encourage you after this video, obviously, to go look up those kind of things and get started. But you need to truly understand what the business does and their business model, how they make money. You need to have a good understanding of the company before you invest in individual stocks. You need to have a long-term horizon, and you obviously need to work out whether the company is worth your investment or not, right? Now, the other method, the passive investing method, is a bit easier. You just dump your cash into a market tracking index fund or ETF. Now, a market tracking index fund is literally just a big pool of investor money. All of this money gets taken and it just gets invested into a diverse range of stocks, a whole bunch of different stocks. Could be 100, 500 different stocks all at once. So essentially your money would be spread out across a whole different range of stocks for you to emulate the average return of the stock market over time. For example, there are several index funds out there that just mirror the S&P 500, and the S&P 500 is just a group of 500 stocks. The average yearly return for this is about 10%. So the pros with passive investing over individual stock picking is it is less riskier, and you don't really have to devote much time researching or whatnot. You really just set your money and forget about it. But the con with passive investing is you obviously aren't going to ever get as big returns as you would if you were doing individual stock picking and you were good at it. Like I said, the average return for passive investing in, say, the S&P 500 is about 10% a year. But if you invest in individual companies and you get really good at it, you can easily get a 15, 20, 25, even 30% plus return each and every single year. What is the risk with stock market investing? Well, the absolute worst case is you invest your money into a company that you believe in, and eventually over time that company goes bankrupt and you lose 100% of your investment. You put $1,000 into this company, goes bankrupt, now you have $0 out of it. Your money is gone and you can't get it back. That is just the harsh truth. But the good thing is, if you invest in financially sound companies that actually do have a good future ahead of them, then the chances of that company going bankrupt and you losing 100% of your money are very, very slim. Like, do you seriously think Facebook is going to go bankrupt over the next 10 years? No. It's almost too big to fail at this point in time. But the best case scenario in theory is infinite. There's no limit to how much a stock price can go up. You can lose 100% of your money, but with a stock you can essentially increase 100%, 200%, 500%. When you start to look at it like this, the reward easily outweighs the risk, especially if you do get good at picking individual stocks. But I'm warning you, before you get into this game, you need to be willing to put in the time, the effort to do the research. And if you do, you will be rewarded for it over time. Okay guys, that's all I have for today. Hope you guys enjoyed the video and you got a ton out of it. Hope it helped you out if you're new to stock market investing. If it did, obviously, like I said, smash that like button, please. Don't forget to click the circle here to subscribe. Check out the video and the playlist, and as always, have a good one.